Hello, Bulls and Bears, and everybody in between. It is Friday. Happy Friday to everybody, especially to those who work Monday through Friday and get Saturday and Sunday off. If you're not working, if you're retired, congratulations to you. Just recording a quick video before I head out the door. Going into work later today since I had some obligations here at the house. But another big sell off today. Now, I'm going to lay everything out at the beginning of the videos here. I'll try to do this going forward because some people were saying that I start talking about something and then I switch subjects or switch topics, which is true. I tend to get kind of off topic and down into some off into some rabbit trails. But here's what's on tap today. Where is the Plunge protection team? I'm going to talk about that. I'm going to talk about what worries me about this market correction that we're seeing right now. Sell off, crash, many different names you can put on what's happening right now. Central banks prepare unprecedented response to market sell off, and that's part of what worries me. We'll talk about that. Buy the dip. First, there has to be a dip, and right now there's no dip because it just keeps going down. We'll talk about what makes a dip, and when it may be safe to try to get back into these markets, if at all. Finally, the Black Swan spreads, global recession. All right, so let's get started. Now let's start right here. We're just at 1,000 points down again today on Friday, which would it be if today closes out at 1,000 point loss? It's going to be the third 1,000 point drop this week. This is a record-setting plunge, and in fact, it's so bad the S&P 500 now has suffered the quickest correction since the Great Depression. So we're talking about Great Depression type of stock sell-offs right here. First topic, where is the Plunge protection team? Well, let's talk about that. Some people are saying that the markets are bigger than the Fed. I tend to disagree because the Fed is unlimited with the amount of stimulus they can pump into the economy. So if that's the case, why are they not rescuing the stock market? Well, first of all, and we've talked about this in the last few videos, now they have an excuse because of this black swan event that's unfolding across the globe. All right, remember the bankers, the Fed, they do not want to take the blame. And instead of just admitting that this is a bubble that needed a correction, they're likely to come in with even more rescue operations. But first, there has to be a lot of blood on the street to justify the additional Fed intervention. And again, I think there's going to be rate cuts. There's going to be more stimulus. Eventually, there will be a dip. Nothing goes down in a straight line forever, including market sell-offs or crashes. They eventually stop. They eventually see a bottom. Right? So where is the Plunge protection team? Well, we can see they're taking a hands-off approach right now. Right? And who knows what's going on behind the scenes? A lot of this is just guesswork. Nobody in the world knows except for the people that are actually doing the decisions or the manipulation of this. But without a huge sell-off, then huge central bank intervention would not be as justified. Now, this is what worries me because people are not going to learn what's really going on because of this, and this is bad. Right? Most people don't realize that this economy, the stock market, the housing market, the debt markets in general are in an enormous bubble that needed to be popped, that needed a correction. But now instead of blaming all of the intervention that went into inflating this bubble, instead of blaming that, the central bank intervention, now they can just point to the black swan event that's unfolding globally, and they could say, oh, there wasn't a bubble. If it wasn't for this black swan event, there was no problems, everything was fine. And that's what worries me. It's going to be lessons not learned. Now, what type of central bank unprecedented response are we likely to see? Well, it's not good news, but here's what's being forecasted. And this is out of CNBC. Ex-FedGov Wars sees coordinated global bank action soon in the response to this outbreak. And do you see something wrong with this headline? I see something very wrong. So coordinated global central bank action. We've already seen coordinated global central bank action. That's why there's such a big bubble in the first place. Right? The globe has already been buried under over $200 trillion in debt. But now they're just going to say that's not enough because they have to respond to this crisis, right? So now with this huge sell-off and panic, it gives justification for the central banks to come in. And again, most people not really paying attention say, okay, yay, the central bank's coming in. They're going to save us. I don't think they need to save us. I think they need to let it crash, right? Because the bigger they inflate the bubble, the worse the correction. Let the correction happen. I wish it would have happened a few years ago. I wish there would not have been any central bank intervention, multiple QEs, Operation Twist, repo bank bailouts, the Fed blowing up their balance sheet, buying bad assets from the bank, pumping money into the debt market, right? Let it crash. The problem is, even though we're seeing a massive sell-off, I still do not think we're going to see true price discovery. I think at some point they're going to come in as the quote-unquote saviors to stop the bleeding, and this is what worries me because people will not have learned a lesson from this if they do that. Now, with that said, some people were saying that I said buy the dip. Well, first there has to be a dip, right? So a dip is when markets drop and then you start seeing some green days and things level off a little bit and then start rising. You start seeing an uptrend again. Well, it's been nothing but down for several days. So first you have to have a dip. So no, I don't I don't say buy the dip because there's no dip. Eventually, yes, there will be because nothing goes down or up forever. There's always a correction. There's always boom and bust cycles. Now let's talk about who is saying buying the dip, and I don't necessarily agree with this, but I like to look at who's talking about the topics that we like to look at here. Jim Cramer, buy, 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 buy. He is suggesting young retirement savers put 401k money into this week's market plunge. Okay, I'm not a big fan of Cramer, but it's interesting to see, what he is talking about. I actually strongly disagree with what he's saying because first you have to see the beginning of a dip before you need to think about doing that. And yes, I still am of the opinion, and this is just my opinion, that markets will eventually be brought back up from this intervention. But now they have justification and they won't have fingers pointed at them. Of course, I'll be pointing the finger at them and you will, but 99% of the population will not be pointing the finger at the intervention that occurred in the first place that led us to this enormous bubble. And next, what type of unprecedented response will there be from the central banks to this market sell-off? Well, here we go. Another Fed head is saying rate cuts possible. And it really should be no surprise to anyone here. The problem is they don't have much room to cut. We are already at about 1.5% on the Fed funds rate. They could go negative. Negative rates tend to not work, especially when the population starts to panic. And many people had thought that negative rates would not even be possible. But we've been saying here on this channel that we're likely to see rate cuts and negative rates at some point, so it would be no surprise. But if this does spill over and finally spook the majority of the population that's propping up the economy with their consumer spending, or if just the fear of this pandemic keeps people at home and keeps people pinching their wallets and not spending, you could start seeing massive job losses and layoffs because consumers are the people, are the force through their spending, through their swiping their credit cards, taking on debt. They are the force that's keeping this economy from imploding right now. And remember, 70% of GDP is consumer spending. So when the consumer finally panic and pull back on the spending, that is what's going to trigger the actual recession and major job losses, bankruptcies, foreclosures. And of course, that's why you see a lot of the politicians trying to keep everyone calm because they do not want to cause further panic on top of the panic that we're already seeing. And just this plunge in the markets, are going to wake a lot of people up. I'm just again afraid that they're not going to point the finger at the right place. People are going to be asking for the central bank to come in and, quote, save the economy. Okay, so I think we touched about everything. We talked about first there has to be a dip. Black Swan spreads, global recession. Let's talk about that. Will this lead to a global recession? The answer is yes, eventually, especially when we start seeing more food shortages in more major countries, including the U.S. that is when even the sheeple, the people that have no idea what a central bank even is, that's when they are going to panic and pull back, because that's going to be something that's going to stare them right in the face. That'll be undeniable. Empty shelves, food shortages. We saw a record number of crops destroyed here over the past few years in the U.S. Farm bankruptcies skyrocketed. The trade war really impacted the farmers, as well as the insane severe weather. Right, it's looking like a perfect storm for a global recession. Now, I think that there already is a recession. The problem is, for the official declaration of recession, you have to wait for two consecutive quarters of negative growth before the newsman on the mainstream TV there, the mainstream channel, will admit that there's a recession. I really don't think we ever got out of the last financial crisis legitimately. It took massive central bank intervention for that crash to get corrected into this latest bull market that we've seen go on now for 10 plus years. Right, but keep your eye on the consumer. When the panic spreads to the general population that's keeping the economy propped up with the spending, that's when it's really going to hit the fan. And hopefully, we'll be here to report on it for you. Thank you, everybody, for watching. I hope everyone is prepared for this. And I'd like to hear your thoughts down in comments. Ride the bull, prepare for the bear. Bye for now.